What is going on, traders? Welcome back to the Traveling Trader. What is the best month to trade stocks? Well, if you happen to run that search term through Google right now, you'll find out that as a matter of fact, April is the best month overall to trade stocks. Now, for the new traders who unfortunately joined the market in the beginning of 2021, this might come as a relief. But also for the rest of us who have been suffering through the rising bond yields as well as the correction in the NASDAQ. And the good news is April is right around the corner. Now, of course, that does not mean that we're guaranteed anything. This is a market. This isn't Disneyland. So let's objectively look at the data we have, pinpoint what indicators we can use, what we should watch out for, and most importantly, how to trade this market. I will be definitely going over that in this video, so you will want to stick around, just as I have been the whole time through a bull market, through a bear market, through a market correction, through a market crash, back to a bull market. I gave you my thoughts on why I thought a correction was coming February, March. If you're part of our trading group, you know that we got a little bit more aggressive with stop limits. We bought calls on the VIX, sold calls against our shares. Just a plethora of mitigation tactics. Obviously, you can't always avoid losing money, and I'm not saying that we got it 100% right. Nobody ever gets it 100% right. However, reacting accordingly and mitigating properly could be the difference maker between you being down 50% and you being down 10 or 20%. But before I get into it, if you get anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know how you're trading this market coming up. And just a quick word from our sponsor and we're off to the races. This video is being sponsored by our good friends at HelloFresh, America's #1 meal kit. If you're anything like me and you live a hectic lifestyle, you try to eliminate as many time-consuming tasks as possible. One of the things I hate doing is going to the grocery store. The average trip to the grocery store takes 41 minutes. With HelloFresh, you can skip those trips and get everything you need to make chef-curated meals delivered to your door. Now, because I'm a trader and I live on the West Coast, my day is literally jam-packed from 6 a.m. to 1 p.m. That is the first time I get a real break in the day, and surprise, surprise, I'm hungry as heck at that time. The last thing I want to do is go to the grocery store, and there's only so much fast food that one can eat. HelloFresh cuts out stressful meal planning and prepping so you can enjoy cooking and get on the dinner table in just about 30 minutes, or even 20 minutes with their quick and easy options. I do typically try to eat as healthy as possible as much as I can, and HelloFresh makes living healthy easier with many low-cal, carb-smart, vegetarian, and even pescatarian options every week. Plus, every recipe is packed with fresh produce sourced directly from farmers. So go to HelloFresh.com and use code TRADER12 to get 12 free meals, including free shipping. That's HelloFresh.com, code TRADER12 to get 12 free meals, including free shipping. So before we take a look at which stocks and which sectors to trade, let's take a look at the data. Between 2000 and 2020, the S&P 500 gained an average of 2.4% in 15 of the last 20 years. That means only 5 of those years the S&P did not do this. The next two best months are October and November. Now, in my last video where I said what I expected for 2021, that around April and May is when I foresee another potential rally. The reasons are a multitude, from the economy opening up more and more, from the stimulus checks coming in. I talked about seasonal things that happen regularly, like tax returns. Also, that is naturally the next wave of buying after Christmas because people spent all their money during Christmas and now they're getting a huge chunk of change back from the government. And we tend to see a lot of money spent on retail, but also other things like travel planning, etc. Okay, now let's take it 20 years back. From 1980 to 2020, the best month in the stock market has still been April, with an average gain of almost 2%, 1.97%. Another research study took this back to 1950. So we already saw from 2000 to 2020, from 1980 to 2020, how about from 1950 to 2020? Still, April is the best month in the stock market, even if you take it all the way back to 1950, gaining an average of 1.5%. As a matter of fact, the last 6 Aprils in a row, the S&P 500 registered a positive gain. In the past 5 years, the top performing sectors have been XLE, which is the energy sector, XLB, which is the materials sector, and XLF, which is the financial sector. Now, obviously, not every year has the same market conditions. In this current wave of the market, we are recovering from a pandemic-stricken recession. However, it just so happens that energy and materials are two sectors that are also cyclical, meaning when the market is recovering from a recession or when the economy is recovering, those are two of the sectors that will also see a boom because they are cyclical. Non-cyclical means that regardless of what happens, that sector is unaffected. Now, here's the interesting part, because we recently saw a major correction in technology. Going back 5 years, more than half of the winners in the stock market have been tech stocks. And here are the list of S&P 500 stocks that beat the market every April going back 5 years. We have companies in energy like Hess, consumer discretionary like Amazon and Booking. I talked about Amazon with regards to retail booming in April in my last video, go out and check that out. But it completely makes sense that it's also part of this list. We have companies in IT like Visa, MasterCard, Global Payments. Now these aren't typical IT companies. Visa, MasterCard, Global Payments, obviously those are going to benefit from a rise in retail sales. Now, before we get into how to trade this, and I'm gonna give you some option and stock ideas as well, but before we get into how to trade this, it's very important to throw out a couple of caveats here. Just because something happened previously doesn't mean that it's going to happen again. Secondly, it's getting really disconcerting reading comments from people who are trading based purely off of YouTube videos with no amount of nuance or analysis whatsoever. Just because somebody, including myself, throws a ticker out there doesn't mean that it's carte blanche to just buy it whenever and you'll be profiting regardless of when you bought it. Tons of times I clearly see people buying stocks at the high after a major run-up has already happened. NIO comes to mind, Tesla, BNGO, NNDM, and not only that, but they will disproportionately load up on these stocks, maybe because of some of the language that some of these YouTubers use, like load the boat or whatever. But just because you see a ticker symbol doesn't mean that you can buy it whenever and still expect to make money. This is a market. As I said, this is not Disneyland. And it's all about supply demand. Just because you bought Tesla at 800 doesn't mean that there's a market for it at 800. Another thing that people do is they'll buy something and they'll say that they bought it for the long term, but then a week later turn around and lament at how they lost money. If you're buying something for the long term and it's part of your high conviction group, then it truly means that that's a long-term stock for you. The way to mitigate some of the harmful effects that hodling can seemingly bring, don't overposition, meaning there's no reason why 50% of your portfolio should be NIO. 2, learn how to properly average down, meaning if you are going to average down, i.e. buy more shares in order to bring your cost down, don't do it too frequently. If you bought Tesla at 800, that doesn't mean that you buy again at 780 and then 760 and then 730. That's way too frequent. The next time you should buy, the only reason you should buy is if that price significantly puts a dent in your cost basis. So if you bought at 800, maybe you plan the next time to buy is at 700. And then the next time you plan to buy is at 600. But not, 800, 780, 770, 760, 740. Anyway, I just wanted to put those caveats out there because right now there are actually some beaten down stocks in the market, including tech stocks. And although they might present a good opportunity to buy, it does not mean that it has to go up just because you click the buy button. I'm gonna make a whole video on this later because I think it's an extremely important topic and there are way too many moon boys on YouTube. And yes, most of them are boys. So I'm gonna be dedicating a whole topic to that, but I just wanted to give a caveat here because yes, I will be talking about some stocks to buy, some sectors to buy here to take advantage of a potential April rally and beyond. But it does not mean that the minute you click buy, it's gonna go up. As a matter of fact, in this type of climate, I would argue against buying anything for the sake other than long term. Okay, if we do think that the market is going to increase a little bit around April, then how do we design some low risk trades to take advantage of that? Well, let's talk about the stocks first and then we'll get into options. But if we take a look at the SPY, you can see that the SPY actually closed. I think this was an all-time high on Friday. Now, if we are going to see a bump in April, that means that the market is expecting the SPY to break out of this resistance here. I'm not going to lie, these two candles here, these last two, do look bullish, bouncing off of the 50-day moving average, but I will want to see a breakout before jumping in. However, you can pull up a SPY chart on TradingView because TradingView is free, and you could see that if the S&P 500 does, as a matter of fact, breach that 397, 398 level, you can look at the SPY, then you could simply just buy it and hold it for April. Now, it could be a little bumpy with rising bond yields and whatnot. We still have that ship stuck in the Suez Canal, which I do think eventually will be free in the next week or two and will actually be another market catalyst, a positive one. But if you don't know how to trade options, dollar cost averaging into the SPY is always a good idea for the long term. Let's take a look at another index though that is actually beaten down where I think there's more opportunity, and that's the NASDAQ. So let's take a look at QQQ. Now the NASDAQ is the only index in the US that actually saw a correction. This drop all the way here in the beginning of March. We are bouncing off of the 100-day moving average once again, and as long as we maintain above the 100-day moving average, we should be fine. But on the NASDAQ, there is still a lot of room left before we get back to all-time highs. So we have about 6.66, wow, ironic. Wow, that got dark really quick. 6.66% to get back to all-time highs, and then obviously more if we are going to break all-time highs. But if we go back to the data that says tech stocks usually see the biggest rallies here, then investing in the NASDAQ makes sense. Now, here's the good thing about this play. In my view, I do like the NASDAQ more than the S&P here because obviously, I like buying things at a discount, and the NASDAQ has been crushed, like I said, down 10% already, but the NASDAQ is also a good long-term play. So if I buy the NASDAQ here at the 100-day moving average, and it actually falls to the 200-day moving average, then the next buy that I'll have for QQQ is around 290. Not gonna lie, this head and shoulders pattern here is making me a little uneasy. This is a bearish pattern, but it doesn't mean that it has to play out always. Still, I'll be wary of that. But I don't mind buying NASDAQ at the 100-day moving average, and we'll keep some dry powder in my pocket for if it hits the 200-day moving average. All right, well, what other stocks could you buy? Well, I talked about the Easter rally in my last video, but Costco and Amazon always kill it after Easter every single year, going back over 20 years. And if we take a look at Costco, it fell below the 300-day moving average. We actually bought this in our private trading group, and if you want access to all of our trades, link is in the description. But Costco has about an 11% potential gain just to return back to previous resistance levels, making a nice run here after this V-shaped recovery. Walmart is another stock that looks just like Costco in terms of this accumulation pattern, but hasn't had the rally yet. So there's a lot of cushion left in Walmart as well. Now, some of the beaten down travel stocks that I've talked about before in this channel that have had nice runs already, like Carnival Cruise Lines or Jets, which is the airlines ETF, those are still in play for the long term, and they also double up as recovery plays. Okay, so how could we design some low risk options trades around this? Well, let's take a look. If we think that for the month of April, the SPY is going to be higher than it is today, regardless of what that is, well, you can simply just buy an at the money call spread for very cheap, and it is actually low risk. Let's take April 30th expiration, for instance. This is the SPY options. If we come in here and we buy the 395, 396 call spread, we would pay about $62 for it. Now, the max profit would be $38 because it's a dollar-wide spread. We're paying $62, so whatever's left is our max profit. And all we need is for the SPY to finish above 396, even if it's a penny above 396. You can even do this at the NASDAQ. If you buy the 315, 316 call spread on the NASDAQ, you're gonna be paying $59 for it. It's a dollar-wide spread, and a dollar minus $59 is $41. So that would be your max profit. Obviously, you can always just buy at the money or slightly out of the money calls on these things. But if you're a fan of this channel, you know I hate buying calls in general. One of the worst ways to make money in the markets. You could get lucky sometimes though. Now you can even take these at the money bull call spreads to stuff like Walmart. So buying the 135, 136 call on Walmart expiring April 30th, you're actually paying $50 for it, meaning your max profit is $50. That's a straight up even trade. Anyway, traders, that is it for this video. Oh, I'm also doing a $10,000 challenge in our private trading group below. I cleared out an entire brokerage account, my Robinhood account. I will be doing a video on this, but I cleared it out, put 10K in it. We're going to be buying the dips, utilizing some of the strategies that I talk about, as well as some of the option strategies I talk about, and we're going to grow that account over the long term. If you want to track the progress of that, link to our private trading group is in the description. You can follow along. The reason that I did it in Robinhood is because you can buy fractional shares, and I want to show you guys how sound investing looks like regardless of portfolio size. So sign up if you want to follow that. If you got anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know how you're going to be trading the markets for April and beyond. Or if you have any questions about anything that I talked about, I'll be happy to answer them. I try to answer every single comment. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.